Healthcare is plummeting, down 3.1% this week, amidst a bearish trend. Regulatory risks are escalating. This is what every serious investor needs to know about healthcare right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. This week, we are navigating normal conditions in the market, with the VIX at 19.2, indicating a relatively calm environment. As we take a closer look at the various sectors, healthcare is standing out, particularly given its recent underperformance relative to the S&P 500. The healthcare sector ETF, XLV, has seen a decline of 3.1%, which may present an opportunity for investors to reassess this critical space. With the sector's weight in the S&P 500 and its importance in the overall economy, it deserves our attention right now. Given the potential for innovation and growth in areas like biotechnology and medical devices, as well as the ongoing need for healthcare services, this sector is poised for interesting developments. As we dive deeper into the healthcare sector, it is essential to remember that this is educational content and not financial advice. Let us start with the technical picture and what the charts are telling us. The healthcare sector, as represented by the ETF XLV, has been experiencing a decline, with a weekly change of -3.1% and a monthly change of -1.41%. The RSI reading of 46 implies that the sector is in a bearish momentum, suggesting that the selling pressure is gaining traction. This reading indicates that the sector is not oversold, but rather, it is in a state of consolidation, where the bears are trying to take control. The trend direction is clearly downwards, with conviction, as the sector is making lower highs and lower lows. Key support levels likely exist around the recent lows, while resistance levels are likely to be found around the recent highs. The current move looks like an extended overreach, rather than a sustainable breakout, as the sector is due for a consolidation phase. A specific technical setup worth watching this week is the potential for a bounce off the support levels, which could lead to a short-term relief rally. However, the overall momentum remains bearish, and the sector is likely to remain under pressure. Now let us look at the fundamental catalysts driving this sector. The healthcare sector is poised to navigate a complex landscape this week, influenced by general macro conditions. With the VIX at 19.2, market volatility is moderate, which could impact sector performance. Key stocks such as J&J, UNH, PFE, ABBV, and Merck are signaling a mixed outlook, with some companies expected to report earnings, providing insight into sector health. Regulatory news and macro data will also be closely watched, as they can significantly move the sector. The longer-term fundamental thesis for being positioned in healthcare remains compelling, driven by an aging population, increasing healthcare spending, and innovation in medical devices and biotech. Macro tailwinds, including a growing demand for healthcare services, are expected to support the sector, while headwinds, such as potential regulatory changes, could pose challenges. This week, investors will be monitoring earnings reports and regulatory updates, which could provide clues about the sector's resilience. As we assess the healthcare sector's prospects, it is essential to remember that this is educational content and not financial advice. The interplay between macro conditions, earnings, and regulatory developments will be critical in shaping the sector's near-term trajectory. As we consider the implications of these factors, it is crucial to evaluate the sector's overall health and positioning. Next, let us talk about the specific risks you need to manage this week. The healthcare sector is navigating a complex landscape, with regulatory uncertainty, drug pricing pressures, and supply chain disruptions posing significant risks to investors this week. Given the current volatility environment, with the VIX at 19.2, position sizing is critical, as it allows investors to balance potential returns with downside protection. Unexpected headwinds, such as changes in government policy or major clinical trial setbacks, could further exacerbate market fluctuations. To manage downside exposure, investors should adopt a disciplined framework, incorporating stop-loss orders, diversification, and regular portfolio rebalancing. By doing so, they can mitigate potential losses and capitalize on opportunities as they arise. As investors continue to monitor these risks, it is essential to remain informed and adapt to changing market conditions. And now for the strategic outlook, where does healthcare stand heading into next week? Our strategic positioning recommendation for healthcare this week is cautiously bullish, driven by positive biotech trends. Investors should track the ongoing innovation in gene editing therapies. This is educational content and not financial advice. For more insights, like and subscribe to Financial Market Oracle and comment your healthcare watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.